After going through the financial statements overview, this round I'll be talking about income statement. So what is an income statement? An income statement is a financial report showing the company's revenue and expenses, okay, over a specific period. So why do we go to income statement? I take a look here. So these are the main purpose. And actually, these are the most focused financial statement actually by the market lah. Yeah, on whether to judge the company's performance. So first, whenever people go to income statement, is to assess and track a company's profitability. Is the revenue going up? Is it still profitable? Are you still growing? Or are you declining? Yeah. Then to assess and track the business performance, and not only that, is to track also your share value performance. Okay, so whenever you go to the income statement, what we need to focus, I already make it very simple for you. Okay, like I said already, all right, we are stock investors, we are not accountants, and we do not need to know everything. Value is when we help you filter out the necessary information that you guys need to know. Okay, not to further make you confused. Okay, more doesn't mean good. Okay, sometimes less is more. Yeah, so first things first is these are the metrics that you need to take a look at in the income statement. Revenue, cost of goods sold, gross profit, operating expenses, operating profit, and then net profit. Okay, I will go through one by one right now with you guys. So revenue, very simple. It's the money that is earned from your main business. Okay, like for example, this bakery, they sell cake, sell bread, right? Okay, so the moment they sell it, okay, and then for example here, in the moment they sell it in 1 month, they will earn 10,000 from the sales of these baked goods. That is the revenue, $10,000. Okay, and of course after that revenue, right, you need to minus what? Minus cost of goods sold. That means the cost is needed to produce the goods. Direct cost attributable to the production of goods sold. So for example, in our bakery business, flour, sugar, egg, butter, all of this, right? And the wages of the bakers. So you need to add everything here, okay, to minus it off from the revenue. And this is what we call the cost of goods sold. So in my example here is $4,000. So after you minus, okay, from revenue minus cost of goods sold, whatever that's left at that level is what we call the gross profit. Profit, okay, gross profit is after you deduct cost of goods sold from the revenue. So you take 10,000 here, minus cost of goods sold is 4,000, the gross profit is 6,000. Okay, then after you minus everything already, right, there's still things to minus also. It's what we call the operating expenses. Now, this is different from the cost of goods sold because operating expenses is the cost required to run the day-to-day operations of your company. Let's say, for example, in the bakery business, you need to rent the shop. You need to pay for utilities. You need sales and marketing expenses, maybe salaries, okay, for your admin staff. So let's say you add everything in this example here, your cost is 2,000 per month. And this is your operating expenses. Okay, so what is operating profit? This is when you take the gross profit minus the operating expenses, and the balance is the operating profit. Yeah, so in our example here, the gross profit is 6,000, right? We already agreed here. You minus the operating expenses of 2,000, then your leftover operating profit is 4,000. So in short, you can say that, hey, how much operating profit you make from your bakery business after minus everything is 4,000. Now, finally, there are still things to deduct. So that's what we call net profit. Okay, net profit is simple. Because operating profit here, there are only two things, extra things that we need to minus, and that is interest and taxes. Okay, let me repeat interest and taxes. So operating profit, after you minus interest on your loans and also minus taxes that you need to pay, that is the net profit. So in our example here, the operating profit, we all agree is already 4,000, right? Okay, and then your loans is 200, your taxes 600, and that's why your balance is 3,002. Okay, so now that you get to see the whole picture on how the income statement works already. Yeah, now this is all the things you need to see in a company. So whenever I flip into an income statement, these are the things I want to watch. At the end, revenue, are you growing or not? Okay, then go down to the bottom, net profit, are you still profitable, and is it higher than last time? This is the thing I want to see. And of course, in the middle, like cost of goods sold or operating expenses, good to know also, because I don't want my business, okay, despite growing, okay, my cost of goods sold or operating expenses very high. So it's very inefficient running the business, which will affect my downline, which is a net profit. No point revenue growing, but the net profit same or declining. That means that, hey, my real money is not really growing, despite business growing, but there's no money left because there's too much high expenses in the middle. Okay, so this is the things that actually you all need to do. Very, very simple, right? For income statement. Now, this is of course, okay, things that you need to know. Now, I will like to do something extra for you guys. Okay, I will go through the real, okay, income statement of a company. Yeah, okay, so this is what I want to do for you guys right now. Now, I want to take an example of Lululemon, for example. Let's use Lululemon. You all know Lululemon, right? It's an apparel company. So all you need to do is just type Lululemon annual report here. Just type Lululemon annual report. Go to the annual reports here. Okay, let it load for a while. Okay, then go to the latest one. Yeah, I just want to show you examples lah. Now, at first, it may seem daunting. Okay, don't worry. There's a lot of words, right? Because this is where I teach you where to go and find. So there's a lot of things. You want to go and see the income statement, right? Now, let's go through down here. There is a here, table of contents, right? You want to go and see the financial statements, you just click here, financial statements, click. Okay, then you go and find the income statement. So the income statement is here. Okay, you have to keep on scrolling, go down. This is the balance sheet, which I will go through in the next video. Here, this is the income statement. Okay, let me hold on, this is too big already. This is how it looks like. So can you see? So for January 2024, for Lululemon, this is the revenue. The revenue here, 9.6 billion. All right, they minus the cost of goods sold, the things they need to do to make their clothes, around 4 billion. And then the gross profit, right, is 5.6 billion. Then after the gross profit, you remember, you need to minus off all of the operating expenses, right? So these are things, the sales and marketing, goodwill, everything here. But for us, we are not accountants, we are as investors. Okay, we do not need to know all of this. At the end of the day, I just want to know what is my operating profit, or also known as income from operation. After minus everything, hey, I still got 2 billion here. Then remember, after your operating expenses, you need to minus your interest and your taxes, right? So here, can you see? This is the taxes, the income tax expense here. So after minus everything, your net income is 1.5. So this is how it looks like. Similar, very simple. Yeah, so each of them can be displayed differently, but the flow is all roughly the same. All right, now let's go back to my slides. Yeah, so this is how it looks like. So at the end of the day, in the income statement, the things for us to focus on in the future is to make sure that there's revenue growth. Okay, make sure the revenue is growing, and then their gross profit margin, and also the operating profit margin. Make sure it's positive, okay, and no loss making. All right. So this everything, okay, you need to know about income statement. Very, very simple, right? Okay, so on the next one in my video, I'll be going through the balance sheet for you guys. So see you in my next video.